Hi everyone, a massive warm welcome to today's Monday market update. I've got some cool things to show you as well as essentially some speculation on why a certain Dogecoin is running again. Let's crack straight in. I want to show you Bitcoin first of all because we've just had the weekly close. Good news is our last weekly close over here, this candle here did not continue the pain to the downside, which is exactly what we wanted to see. We had a really nice bounce of 15,000. Now, just want to make very clear, the lower we go, in my opinion, the better risk reward we're going to see. 12,000, 14,000, 15,000, these are all really, really strong buy zones. In my opinion, it's what we're sharing in our newsletter every single month. These are areas that, in my opinion, if we didn't have the FTX blowing us through this floor, they would have been, potentially they wouldn't have been hit. That's my feeling, especially when we see a lot of things falling our way in the macro, the US dollar falling, yields falling. There's every reason to think Bitcoin will be a lot higher than it is now. So I think we're in a territory where we're severely undervalued versus overvalued when we were at, say, 60-something thousand when riding high on that speculation. Now we're in those real high value areas where longer term patient investors get very, very interested in. Of course, we share all that within our newsletter and also with our clients. So yes, just with this, a note for the bears as well here, we could absolutely be setting up for another rising channel where we have another breakdown, which really, really is painful for a lot of people because we think, okay, well, here might be the new bottom or we're starting to grind out a new floor. But then we get a little bit higher, we test resistance at the top of a range. 17,500 is going to be a real tough nut to crack. But if you just see how we've done it previously, we just rise and then we fall, we rise into a moving average, then we fall. So this was around the 200 here, couldn't crack any further. This was around the 21 on the weekly, couldn't crack further, then FTX happened. So we could absolutely come up here, this level, and then crash down to the 400-week moving average, which is around 14,000. That is absolutely on the cards. Whether we get there or not is anyone's guess. Let's just scroll in a little bit, just see what else is happening. Now it's a little bit noisy here, so I'll just try and peel out and see what I can show you. So for me, why say above is going to be such heavy resistance is the, let's say the Fibonacci retracement line there. So 0.786 long is a huge point of resistance. You can see here used as a floor, bang, 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 and then sliced right through. We cut down this huge volume area down into this no man's land zone between 14,000, 16,000. Again, above us is going to be very, very difficult to breach. But if we can breach it, then the bottom is likely in, but very, very difficult to call. But ahead, you can see the 0.786 along with this huge volume floor. This is going to act as resistance, overhead resistance. As this price continues to creep up, bangs into there, and that's when we could absolutely have that fall away. So just be aware of that. But so far, Bitcoin's doing exactly what we want it to do, just crabbing sideways, slowly trying to gain some strength. This looks like a little bit of an inverse head and shoulders or something beginning to look like that, which is generally reasonably good towards these lows. Also, if we look here, and I won't go any further than the daily on this episode, but if you have a look here, definitely looks to be like an expanding pennant. This here was what I was charting the other day. Looks like we broke out a little bit, coming down to retest again. So it could be a little bit of a platform here if we want to break up maybe to the top of this rising channel or even a little bit higher. So just keep that in mind. Bitcoin looks okay here for continuation to the upside, but so far just looking to stop the bleeding and hopefully nothing else happens in terms of contagion risk. So far that has cooled down a little bit, and I think more downside on Bitcoin personally is predicated on more something big blowing up again. All right, let's have a look at Ethereum. Now, again, this is a little bit noisy, but there's a few things I want to unpack here for you. So Ethereum very distinctly crabbing between the $900 level and the $2,000 level. That's the June low down here. Interesting to note, we did not create new lows in line with Bitcoin. Ethereum really is just grinding between those areas and has created a higher low. You can see here, this low here in June over here, bang, bang. And why did it create that, find such heavy resistance there at that support? It's the 0.786 level. So exactly what we've been talking about with Bitcoin, but Ethereum seems to be holding up much, much better. Now, I really want to see Ethereum crack through the 21 moving average here, this blue line. Let's get rid of that so we can get a bit more clarity there. And then it will make a run at this liquidity zone up here where we have a lot of overhead resistance, got volume, this band here, which Ethereum took a lot of time to break through previously. You can see here it sliced through there, got above, hit the 200 daily moving average and then down again. So you can tell by the way I'm talking with Bitcoin and Ethereum, the trend is still very much bearish because there's not a lot of power behind these moves. It's the bias rather is on the bearish side. So further downside, we really want to see strength, and we're just not seeing that yet. RSI as well looking a bit sad, going sideways. Nothing to write home with. But for me, this would make a ton of sense if we come back down, test these liquidity zones down below, so the June lows, and then we start to grind higher after that, almost create a double bottom. So over here, and then another one there. That is absolutely on the cards when we're below serious resistance. If we're above that resistance, which would turn support, then I think we can definitely look towards higher figures right now. But right now, this is just not giving me a lot of confidence there, Ethereum and Bitcoin. However, just saying that, Ethereum does look better than Bitcoin. All right, now, Elon Musk on Twitter proposed the Twitter 2.0 app, and he's labeling it the Everything app. So he released some screenshots of what they're doing at Twitter HQ, Twitter 2.0 advertising. So why am I showing this? Well, it's on the second page here. Encrypted DMs, long form tweets, relaunch Blue Verified, and this one here, payments. So it's left blank. And we know Elon Musk has very much over the past said that he loves Dogecoin. He wants to integrate it with everything he does, essentially. And I think algorithms and traders and speculators are really hooking onto that. And even as an investor with a small amount of capital, you could look at a Dogecoin or a Shiba Inu, which is probably the high beta choice on. And when I say that is essentially how altcoins behave to Bitcoin. If Bitcoin's running, altcoins will catch up, but generally you can get a higher return in the altcoins if Bitcoin's in a positive frame of mind. That's very similar to how, say, Shiba runs with Dogecoin. But back to Dogecoin, I think people are expecting the Dogecoin to run, and we've seen Dogecoin have a pretty excellent move off this area here on the 200 daily moving. So it's about a 47% move off the 200 daily moving average. Scrolling out, Dogecoin's been in a very, very serious bear trend since the highs there, but did break out over here when we had a bit more excitement, and we had obviously FTX come in here. But it's above the 200 daily moving average, found support on top of it, on top of some major volume areas. Dogecoin, I think, looks really nice here for continuation and run up to the top of this channel. So what's that? Another 40%. Absolutely nice. If it creates higher high, well, this could be the start of something much, much bigger. You can see here's a high, here's a higher low, so higher than the last, another higher low over here. So really Dogecoin wants to make another higher high to really see that positive trend, and you might see something like this, like that. So a couple of altcoins have really been bucking the trend, and that's Litecoin and a few others. But if you're really looking to dive into, say, a top 10 crypto portfolio that generally weathers most storms, and we rebalance it a lot, it's generally low risk right now. Joe also puts in his 3 types of investors, also pie charts on your weightings on these cryptos, on how you should structure it, and how you should approach each phase of the market each month. So this is really valuable insight, and it's essentially the price of 10 cups of coffee a month. And if you're a serious crypto investor, you need to get this monthly newsletter. It's very much like a report. We're releasing weekly content as well, so you get the videos thrown in there as well. It is great value for money. This week, Joe, this is in our free group. Joe's put the 5 investing principles that we really live by and what you should be paying attention to. But if you haven't seen it, it is crypto's year from hell over, or is there no turkey this year? So we cover FTX, what it means, the implications, where the industry moves forward, what we're likely to see, all that, and with our insights around that whole phase going forward. So if you are interested, make sure you click the link below, use the link tree, sign up as a subscriber. We'd love to have you. It's great value for money. Apart from that, hope you've enjoyed this episode, and we'll catch you for our altcoin Bible on Wednesday. See you later, guys. Tough.